Got to flex on you real quick. But I'm being funny, but being serious, because I think this is why everybody's here. Everybody wants these certificates and everybody wants to stack these things up. So, I'm a big believer in learning from people who have what you want. I'm only here because I was open-minded enough to trust people to teach me things that they said that they could, So when we talk about getting funded, I think these are the three things that I try to keep in mind every day. Each phase of the challenge, whether it's the phase 1 or the phase 2, doesn't matter the account size, I think you have to treat that phase differently. When you're in phase 1, we need to make 8% in 30 days. We don't have time to take a day off of trading. You shouldn't even take a challenge if there's a bank holiday week coming and you're going to miss days. You have to be very strategic with that 30 days. And in the strategy there, you've got to be able to put more risk on. So in a couple of slides, I'm going to show you my different risk for different phases. Phase 1, naturally, more aggressive, more risk. Once you're funded, that 100K account, that doesn't get a lot of risk. The goal is not to slam it. The goal is to preserve, make gains, take profits. The second thing, when we have really good setups, you've got to know how to hit those setups aggressively. I would say Mike does that really well. Mike will wait, and I see him post one markup, and it's a great setup on a pair AUD USD that I know he trades, or Ethereum that I know he's looking at. So it's waiting, seeing the good setup, and then being willing to hit it actually hard. Another piece of that it could say it right underneath here, in the profit taking, closing your trades. We're jumping right into the deep end here, right guys? In the profit taking, some of the phase 1, phase 2 trades, I would not recommend piecing out of the trades at 1R or 2R or 3R. I actually am recommending to people, lock your stop loss so it's risk-free, and if there is the potential for it to be a rip, then you leave it. You don't close. You don't take size off. If you have a great setup, you go risk-free and you let it run. So let me give you an example of that. I had a trade on NASDAQ Wednesday. CPI news was Wednesday, correct? Yes. I see that everywhere on CNBC, everywhere on Twitter, inflation's going to be bad. Inflation's going to 9%. I'm deep in the weeds. I already kind of feel that inflation is over 10%. So I already know that this is going to be a bad news print. So I'll put in, and I did this on Wednesday, you'll see the trade in a little bit. I'll put in a small, on the 200K account, it was like $180 worth of risk with a tight stop loss. And it's right before the news. And as soon as the news comes in, it gaps down. Lock the stop loss, hold that move to catch more of that continuation. Because you knew there was the play for their momentum. Now you're risk-free. Instead of taking half the trade off, and then what if it runs 10 more R? You could have been in it risk-free. Does that make sense? And we're going to get into this when you look at the chart, but I want you to understand I'm saying be aggressive in taking it with the size appropriate, but then managing it a little bit differently. Not getting out, just risk-free. Because all we're always focused on, everybody, is one word, risk. We're never really worried about reward. If you think about reward, you're trying to know the outcome of the trade. If we're thinking about risk, you're just limiting your capital, preserving your capital, and letting the money do the work. You're playing the game. How did I know NASDAQ was going to fall 280R that day? I didn't, but I'm in the game. That's what we're trying to do. And then the last piece, the opposite of this is this. Take the smallest losses you've ever taken. Be willing to literally find a reason that the trade doesn't work, and as soon as it presents, get out of the trade. The ego will ruin you with the funded stuff, especially because everybody's on social media flexing their shit. I'm funded, blah, 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 right? It will ruin you to try to chase after that and slam it. Versus, okay, I'm trying to get funded, but today it ain't happening. Cut this loss, I'm down 0.5%, come back tomorrow, 2% on the account. It's like it didn't even happen. But if you get frustrated and you blow out on a Wednesday, you're not even making it to Friday. And that's a big thing we'll talk about as well. It's mental fortitude. But before we talk about the mental capacity to stay focused for an entire week, because that goes into diet, health, all these other areas of your life, I want to talk specifically about volatile assets. Specifically, these four. So US 500, which is the S&P 500, US 100, which is the NASDAQ, and US 30, which is the Dow Jones. Who here has an idea of what those three are? You want to give me an idea? Someone shout it out. What's the S&P 500? It's the 500 biggest companies in America, and it's constantly changing. Companies will, Tesla was trying to get in the S&P 500, they'll put in a bid, right? What about US 100? It's correct. It's everything minus financials. NASDAQ right now is tech-driven. I wonder, has it always been tech-driven since 06, 05?
I didn't trade the stocks.
So we'd have to, So we'd have to check, but what I'm saying is right now it is tech driven, but the definition of it, I'm pretty sure from what I found on Investopedia and stuff, it's every big company minus financials, minus banks. US 30.
That's by market capitalization, I think so.
Correct. Yep. So US 30 is industrial companies and financial companies. So in there you have the biggest companies, Home Depot, Goldman Sachs, United Healthcare, things like that. Exactly. So if I was looking at, when I look at these three indices for myself, and if you guys want to apply this, the top two are what I am most focused on trading. Why? The Dow, to me, the US 30 is not giving an accurate representation of the entire market because it isn't carrying all those tech stocks. And if you were to Google the biggest market cap by company of anything in the world by asset class, what's bigger than Bitcoin right now? Apple, Google, Tesla. These companies are bigger than entire markets. You know what I'm saying? So those are the companies I want to be involved in. And then trading those indices, when news comes out about those companies that everybody's talking about, no one's talking about Home Depot, bro. No, you know what I'm saying? But everybody's talking about Tesla and Apple. So when I see a headline and I see technically we want to short NASDAQ, Tim Cook's dead, I'm shorting Apple. You know what I'm saying? It's dramatic, but that's how we're kind of combining the play. So to me, if you're a guy like me that's in the market or a girl like me that's in the market, the US 30, it's not the best one. If you look at I'll pull this up. If you look at it 2 days ago, NAS and US 500 moved identically on the open, down, and then US 30 goes up. I'm like, okay.
I argue with people. I'm like, it literally does
Whatever it wants. Because of those other stocks, because of the healthcare, because of the industrials that are in it. And this is tech. So tech could be having a great day because someone got a big contract with the government, and then industrials, they're in the shitter because wood prices are going up and Home Depot's, the stock is dropping. Seriously, it's very tied together like that. So it's super interesting. So that's the first thing, those two top indices. The fourth of the three is Bitcoin. Bitcoin to me is the player, if you're playing the crypto game, it's Bitcoin or Ethereum. I just like Bitcoin better. And with these funded companies, you can trade these assets. I feel very strongly, if you traded no Forex pairs at all and just traded Bitcoin, US 500 and US 100, you can get funded. Absolutely. I'm in the process of building this A2 strategy to do that because I don't want to wake up at 5 a.m., 6 a.m. I want to be able to wake up and do some yoga, go for a walk, have some breakfast maybe, and then start trading at 8. That's where I'm trying to build this next strategy into because now I wake up some days and I rush to meditate to get to the desk because sometimes that entry is 6 a.m. and then it's done for the day.
That's like my biggest battle.
Yeah, me too.
So when I show you guys this A2, you all are going to walk out, even Corinne's going to walk out here with a heart on because it's like every day these entries are presenting, especially on these volatile assets, and they fucking rip. And it's so much simpler in a way than the A1 and the D1. So you'll see. But I think it's simpler to us because we already know the A1 and D1. If you just came in and tried to learn the A2, you'd be like, what? But because you guys kind of have a basis, I think you'll pick it up quick. So again, I kind of said this already. Don't focus on them all. Pick. I lock in on US 500, NASDAQ, and Bitcoin. And guess what? There are many times. This happened last week on Thursday. Bitcoin, I'll just show you the daily report card too. NASDAQ moved on the open at 9:30. I'm out of the NASDAQ long trade at 9:45. 15 minutes into the open, I'm done with the trade. Bitcoin didn't move for another hour and a half, but because of me being tapped into those two markets, I know they moved together. So if NASDAQ just moved, and I'm long Bitcoin, I might as well just hold in. It's not telling me to get out yet. And then Bitcoin ripped as well. So when you kind of are really falling in line with them, you'll know these two kind of move together. So if I get a play here, maybe I split my risk and play them both and catch the volatility on both. So that's what I mean by falling in line. Versus the opposite of this is what? Looking at 34x pairs, looking at every indice, looking at the Australian stock index and being like, where's my trade today? You know what I'm saying? That's not proper. And I used to think that. I used to be like, click through everything and find the best trade. It's like too much information. Slim it down. You'll see my watch list here, 15 things total. I have 15 clicks every day. I find 3 of them that are good, and it's probably those indices in Bitcoin most days, and maybe 1 or 2 Forex pairs, and I lock in, and I'm looking for that entry on those trends. That's it. And you'll see as we get through here. So talking about the routine, talking about like getting inside my head a little bit more, I learned from a mentor a long time ago. I went to my first seminar, it was in Boca. This was 2014 or 2015. I was working for this company. They flew me out there. Their head guy was having the seminar. And I learned a lot. 8 and 21 EMA stuff, I learned a lot. But specifically this, building your ideal routine feeds the passion that you're going to bring to the market, feeds the self-belief that will keep you alive. So I think if you don't have a routine, like Raf was saying, I'm not watching TV, I'm watching charts. If you don't have that passion and then align that with a good routine, I think you won't reach your full potential. So what I mean by that, first, you've got to be flexible. You got kids, you got a wife, you got a girlfriend, boyfriend, whatever. Stuff happens. Your wife calls you, girlfriend, whatever, flat tire. Drop everything. Family first. Like that's life. Like that is why we're trading. Nothing comes above that. But if you're closed-minded to think, I'm not waking up at 6 a.m. to get trades, do you really want it that bad? You know what I mean? So it's like finding this ideal routine to say, okay, I need to wake up at 6 a.m. What do I need to do before, the night before? Maybe be in bed by 9 o'clock. You'll see in my daily report card, I have to be in bed by 9 o'clock or I get a knock on the next day's grade. I punish myself by giving myself a lower grade if I don't take care of my body. So it's like things like that. So again, if you don't love it, you're not going to be able to follow it. And that was why I learned from Scott. It was like, find what works for you. If you're a guy, you work out a lot. You're a personal trainer. Do you like to work out in the morning or the afternoon?
Afternoon.
I hate afternoon workouts. So for like you would love to probably wake up, have a slow morning to yourself at home, and then get to the charts and do your thing, and then hit the gym when you're done. Some people would rather wake up, hit the gym, get the brain going, and then go to the charts. You've got to know what works better for you, and then I think try to, of course, with life and family, like I said, try to get to that aligned, perfect routine as much as we can. And then like my routine now is basically this. Because of the trading, I wake up and instantly I do 3 things. Water, I put salt and electrolytes in it. You don't have to do that. If you do, use good salt, like good Himalayan salt. I'm not a dietitian or a nutritionist. I did yoga teacher training and I like the Ayurvedic medicine and it is really, really good. And even if you listen to like Andrew Huberman, like neuroscientists, salt is actually a really good pre-workout too. I actually just bought this new healthy like electrolyte salt for pre-workout. I want to try it. So in the morning, just 16 ounces of water. I think that's low. That's scientifically proven to help you think a little bit better. The second thing is meditation because that increases blood flow to the brain. As you can see about how fast I'm talking, I go. So if I don't slow down, I'm going to find 5 trades in 5 minutes when I first get to the desk. You know what I'm saying? So to sit there and have the discipline to like be sitting here with my eyes closed, knowing that there's a Discord chat right there going crazy talking about trades, knowing my screen is right here and I could just start trading right now, but having the discipline to slow down for 10 minutes and just be, that's hard. But that sets you up for a really good day for people like me. So if you're fast and high strung like me, I don't understand why people don't. Like, just don't be a bitch. It's 10 minutes. Like, honestly, that's what I want to say to people. Get the app, put the app on for 10 minutes and sit there. And if you can't, that's why you should be doing it. There's just no excuse. So that's how we move in the morning after I wake up. Normally I'm up by 6:30, as you can see, up without an alarm. That's one of the perks of working for yourself. I don't have to wake up if I don't want to. So I'm grateful for that. So I enjoy that. No more positions after 12 o'clock, as you can see. And then through the morning, I'm trading in the Black Shirt Club and VIP Discord chat. And what I'm doing to find the best trades is I'm reading the L50s and I'm following the news on CNBC and Twitter. So what this looks like a little bit more is I'm working through this 15 asset watch list. You can screenshot this, write this down, whatever you want, but these are the pairs, these are the indices, and there's the crypto. That's all I'm looking at on a daily basis. And I click through it, click by click. I think if you have time to trade the Asian session and you want to wake up and trade at 8, you'll have different pairs. You would have AUD, JPY, pairs that are going to be open in the Asian session. But I'm not trading like that. So these are the pairs that are best for me. And I think if you're on our time zone, and these are really good. And also